Sold at 560.
785 the first, 785 the second, be sure, 785 the third, final time, sold. The third and final time at £910,000, sold. Welcome to the current edition of the Allsop Prop Chat. This Prop Chat follows the commercial auction on the 25th of May. My name is George Walker, and I'm joined together with my colleagues in the same office for a change. Ben Hodge. Hi, Ben.
Hi, George.
And Will Clough.
Good afternoon.
So we're all in Wigmore Street. In the week that the Elizabeth line opened in London, we're all very excited about that, and we've all had go getting in, fighting off the crowds. So, Will, just summarise. I'll just do a brief overview, and then you'll run through what actually we're going to talk about specifically. £92 million sale is the biggest sale for a good 6 months, and it was a real vote of confidence in our market. I think probably the biggest factor there is 31 of those lots were over £1 million. So £58 million raised in that sector. That's an overview. Well, what are we going to cover today?
A few points to touch on. We'll try and keep it brief and interesting as ever. We'll look at where the auction sits in the sort of wider context, be it economic or political. Touch on the bigger lots. George mentioned the number there, but we'll delve into a little bit of detail there. Then we'll veer towards C-stores, and with a particular highlight on McColl's, I think. Hodgie will bring up the morbid section on funeral parlours that we've been selling, and then back to a good old friend, favourite boots.
Okay, and that'll bring us to the end. So, economic context, Ben.
Yeah.
What are your thoughts? Because it's changed a bit, hasn't it?
Yeah, really interesting. We've had 2022 year to date, I think for everyone has been quite an interesting one. We've got fears of recession at the moment. We've got interest rates rising, inflation, cost of living crisis all over the newspapers, and let's not forget the war in Ukraine. However, demand for our auctions, it's up 25% on March.
Is that the number of buyers?
The number of bidders, the numbers of buyers that have registered to bid for our auction is up 25%. That is extraordinary.
And they're newbies, aren't they?
A lot of them are. Talking to people on the phone, we're fielding questions about things like VAT that your seasoned investor would know all about, and having to set up entities and how to. And
these are probably people who are used to one or two buy-to-lets, and they haven't come across VAT.
Exactly. I think we are seeing people move across from one sector to another, so from residential to commercial. We've seen it for a long time. But I felt that more so this autumn.
And probably getting out of other asset classes completely.
Yeah.
With the volatility in other markets.
But actually bizarre in the context of lockdown, because the residential sector, the rents were more continuous than the commercial.
But I think we were probably a little bit cautious before the March auction.
Yeah.
Where, the war was pretty new. We didn't quite know what was going to happen. The inflation was.
I mean, no one's lived through current day, haven't lived through inflation, when double-digit inflation from nothing for 5 years. I think the rising rates is interesting because we were very worried about that. I sat down with a buyer on Tuesday. He's saying it's all very well, George. You've gone from 0.1% to 1%, which is a factor of 10 in 3 months.
But it's still only 1%.
But it's still only 1%. And 10-year money apparently was 3.5%. It's now back down to 3%. So in the context of the 05, in the mid-noughties, money was 5.5% all day long. And we're now talking 3 for 10 years. So the appeal of a high-yielding sector remains.
It does. And, I think to have an increase in 25% of registrations is remarkable, because actually going into this auction, there were many reasons, as we've just said, that many people could say, actually, I'm going to step away from the market. But so they didn't.
So many people said, well, you put £1 million in the account, it's worth 10% less in 12 months' time.
That's true.
And whatever the yield, it's getting incremental yield.
I think it's also encouraging. It shows that our marketing works. If we're getting, if we're getting 25% new buyers, we're reaching the right places.
Yeah. Okay, so let's whip on to the bigger lots that we sold. We go on about this a lot. Obviously, we're very proud of it. £60 million in those lots, over £1 million, and there are several under offer. And in fact, Johnny, I think his Devonshire Place lot, which didn't sell at £10.5 million, has gone under offer today, which is really encouraging. Obviously, we're very excited about that. It won't be at 10.5, but it's not far away. Looking down the list of the bigger lots, I don't want to bang on too much about them, but I mean, we don't often have a vacant office and warehouse, and that was the biggest lot. Phil sold £4.3 million. That was lot 24 in Bognor Regis. Interestingly, Ben, your biggest lot last year was the same thing, office and warehouse in Swindon.
It was actually, yeah. The difference with this one is more of a residential area. Swindon was more of a commercial area.
Yeah, but
This actually had a lot of chimney pots around it. It does have an alternative use, perhaps.
Yeah, and it's what our buyers like, isn't it? A bit of a difference.
A bit of flexibility,
and a chance to improve it. So there wasn't really a consistency in the. I mean, it's a retail-dominated auction. £66 million of retail out of the 90. I think Chris's one up in Liverpool Road, Islington, nice piece, selling for a fund, residential income, and a sushi bar right next door to Waitrose. I mean, why wouldn't you buy that?
N1 postcode.
N1, an easy buy for an overseas bidder, and that really appealed. Another one we did before I move on to that was one that Johnny did in Lincoln, again for a fund. We worked with our private treaty team on that for some time, and that was just short of 3.3 million, lot 34. So this use, working with other teams within Allsops, giving it extended marketing, bringing it up to auction and getting it done is very effective. Doesn't happen all the time, but it's certainly £90 million is a lot to be proud of. So, Will, slightly smaller end of the scale is the C-stores.
Yeah, I think it's something we've sold for a long time. I think 2020 we had a bumper year of them. And clearly in the news has been McColl's. And it's not just new news. They've had their problems 4 or 5 years ago with their suppliers.
Yeah, that was Palmer and Harvey, wasn't it?
Yeah, they did a call for cash from their investors not that long ago. Clearly challenging for them.
And every Sunday Times has been full of issues about McColl's.
And every week, yeah, there's been headlines about it. And do you know what? There were certainly, I think there were 3 or 4 that we had in. And how do you put a price on those sort of assets in the short term with these headlines?
But it's interesting. So the beginning of marketing as a big question mark, and within a week, boom, Morrison stepped in.
Exactly. So timing was perfect from that regard. And a couple of them didn't sell under the hammer, but sold straight away afterwards. 2035 fixed uplifts.
Yeah.
Very, very popular. I think traditionally not the greatest of real estate.
No, McColl's is never great.
That's not their market.
But you're not having upper parts and sites and car parking. You're just actually pretty second-hand.
Because they're more cigarettes, magazines, booze, things like that, as opposed to the other end of the sector, which we could touch on briefly, the Tesco's, the Sainsbury's.
Yeah.
Alex's Colchester, brand new 20-year lease, 15-year break, sold.
That was a mountain warehouse, wasn't it? Turned into, was it Tesco's?
And the client actually came to us and said, I've got 2 options for a tenant. One is Tesco's, one isn't. What should I do? Is
that right?
And they went with Tesco's, RPI linked, sold it prior for sub 4%.
Yeah, 3.9%, 2.4 million. It's a nice price.
High Street in Colchester.
But this is what we thought would happen with rising inflation. You're buying into RPIs and long leases, and why wouldn't you, quite frankly? Although it is a big price, sub 4%.
And then 2 more, just to briefly pick out. Well, I mentioned actually Tesco, the tenant. They bought one at the auction again.
In Aylesbury.
We've seen them pop up at 2 or 3 auctions now.
Yeah, they bought that Birmingham one, didn't they? Yeah.
And just a couple of ends of the spectrum on yields versus lease length. Johnny had a brand new Sainsbury's in Portsmouth, 2035 with a break, but 8 years unexpired, 4.5%. Doug had one in Harrogate with 3 years on the lease.
Yeah, we all got miserable pricing.
Sub 5%.
Yeah. But really, I mean, that's the sort of thing that our market loves it. It's not a big lot size.
Yeah.
And they ain't going to leave.
Something, I think.
I mean, we can all get excited about long leases, but fundamentally, if the real estate is good enough, and you'll see that on, some of the bigger, or the lowest yields we've got for some of the bigger lots, because there's options. And like the Harrogate one, that's a convenience store spot.
But we don't want everyone asking us to price their convenience stores at sub 4%.
There's the danger.
Hodgie, from food to funerals.
It's been a funeral-dominated auction in the sort of subsector, hasn't it?
It has. Look,
it's an alternative sector.
We like funeral parlours. We like funeral homes. The market likes it. Why? It's internet resilient. Come on, it's a certainty, isn't it? It's one of those certainties in life. Anyway, we were very fortunate to be instructed over a portfolio of sale and leasebacks of funeral homes in this auction. I won't bore you too much with the yields, but effectively, you're looking at 15-year leases, RPI linked reviews.
Classic leaseback material.
Classic leaseback, funeral parlours, very popular. They achieve between 5 and 6.5%. We also had one in Sidcup, which was again 15-year income, a large lot size actually at 1.3 million, and that sold to the tenant. So really quite popular. Yeah.
The leaseback portfolio, Ben, was all around the country. It wasn't sort of sunny southeast, was it? I think it was Suffolk, Scotland.
Yeah, exactly. It was all around the country.
Good. And I'll just touch on the the boots, I mean, the auction was 66 million of retail. The boots was about 22 million. We sold 15 lots with about 3 or 4 more under offer. You'll have seen these lots this year. The largest lot in this auction sold was Eltham, 2.8 million. That's 5%. And I think one of the most competitive. You'll help us on the bidding, Hodge, but I think Rains Park had something like 95 bids, lot 3, and that ended up going at just sub 4%. That is what we talked about before. It's not really a yield. It's £350 a foot opposite a railway station. That's why people were chasing it, and certainly 90 people. There were 17 registered bidders, so that was a very good day for the boots portfolio. I believe there's a few more to come. People are beginning to really buy the story of the boots, the pharmacies, healthcare, online, and delivery of the prescriptions. So that's very strong. So thanks, Ben. To summarise, 2 auctions ago we were very nervous. Ben, you said it's been a nervous year. It has been a nervous year, but just look at the data, people. £92 million now. That's a very major verticulture market. So we've got the buyers. There's no question. And every reason it should continue throughout the summer and beyond. So thank you for your time, everybody, and enjoy the Jubilee weekend.